All right, today we're going to be jumping back into the Bitcoin price action and talking about why I believe a short squeeze is imminent here, pushing us up into all-time highs, which will inevitably send the entire altcoin market that is in reaccumulation phase right now to the moon as retail euphoria increases and bears capitulate. So let's get into my reasonings for this, starting off with Velo data. This is a free software that does a lot, and what I like it for is analyzing the aggregated open interest versus our funding rates here. And what are funding rates? Well, it's essentially the funding rate of leverage positions on your different exchanges. So if there are more longs than shorts open in the market, well then your longs are actually paying funds towards your short positions. So if you're short in the market while everybody else is long, you kind of receive interest off of those long positions and vice versa. And how we can use this to our advantage is normally when you do see net shorts in the market, you see funding go down. That is actually bullish for the market because the majority is normally wrong and you are more likely to squeeze those shorts to the upside. As we can see back here at this low at like 57K, you saw funding decrease and go into the negative as price rose up here, which signaled a divergence between shorts being opened while price was rising, meaning that all of those sellers were getting absorbed and a squeeze higher was likely, which is why you saw us launch out of this range right here, and then you see the funding rates start to rise up. Once all of those shorts are squeezed and longs start foaming back in, this is where we distribute, come back down, you see funding rate decrease, and then the cycle repeats. You saw at this high back here, lots of longs were FOMOing into the market, creating it very expensive to be in those long positions with a very high funding rate up in here, signaling a pullback was likely in this area. So what are we seeing on current price action? And while we're not in the red on funding rate or anything like that, we are certainly decreasing heavily, the aggregated premiums tanking, and price is diverging away from these positions. You see here, if we jump in real locally here, price is trending up. Open interest is trending up, which means positions are being opened in the order books, and our funding is trending down, which means those positions being opened are short, and price is diverging away from those sellers, showing that there is absorption going on and that a squeeze higher is likely. Not only can we use Velo data to see this data, but jumping into Coin Inc, not only do we have our open interest, but we also have our CVD, cumulative volume delta, the direction that open interest is going, which direction our positions being opened, and then the net long and net short down here calculated based off of that CVD. And as we can see throughout this range right here, while price is rising up, you have net shorts increasing, CVD going down, indicating once again that there's absorption of all of these sellers. We do see a lot of sellers within the order books here, but these are not massive orders. Price can easily rip through all of this without pulling back at all, but don't be surprised if we do come up here, reject momentarily, retest these volume levels before ripping to the upside, or even coming back and actually sweeping these lows before heading up to grab that liquidity. But yes, our order flow right now looks amazing. You can tell that there are a lot of shorts being opened in the market right now, and because price is not respecting those shorts, they're on the wrong side of the market, meaning a short squeeze is likely. Now that being said, while a short squeeze is likely, I actually do not want us to just immediately squeeze those shorts and reset the open interest. If price comes up into these levels here, into these big sell walls that we were just talking about, into these imbalances here on the chart, into the point of control of our visible range. If when price comes up into this level right here, if we see open interest just fly down and reset all the way back down here to our previous lows, then you know that this move right here was nothing more than a short squeeze and there is not bullish continuation. When price moves up off of a low, you want longs to be opening, creating that bullish continuation and showing buyer pressure. If it is nothing more than a short squeeze, when you lose that fuel from shorts closing their positions, price is likely to reverse. So if open interest were to reset, once you do fully reset down to the lows, you're not going to have any more fuel and price would likely reverse from that level, and that would actually be bearish. What we want to see happen here is for price to shoot up and open interest to, it can come down a little bit, right? We want to hold these lows on open interest. We want to potentially trend up here, showing that there's bullish continuation where longs are balancing out the closure of those shorts. And then you want to continue to see bullish order flow within here until we do squeeze up into all-time highs. And then this right here is where you are going to see massive capitulation from the short positions. You're going to see the squeeze up, and that is acceptable because we will be launching through those liquidity levels that is going to cause massive leverage liquidations, and it is to be expected. But that's something to keep in mind. We don't necessarily want this short squeeze to immediately start and for all of those shorts to just get liquidated immediately, right? We want to save those shorts in the market, to continue to rise up here, and then we can use them as fuel later on. Now, if we did come up here, squeeze some shorts, and it was momentarily bearish, it's not the end of the world. We could easily just pull back here, sweep these lows, right? That would make a lot of sense before then ripping to the upside. We see this kind of fractal play out a lot on Bitcoin. While you're forming kind of this Bart Simpson pattern, you could say, there is usually a lot of volatility like this, such as at this low back at 57K. You know, this is when we had our last FOMC meeting. We had price shoot to the upside and then reverse back down on that volatile day, filling these imbalances and reversing before starting the real trend and sending to the upside. So don't be surprised if we do chop in here until after that FOMC, because we have another FOMC meeting Wednesday, so that's something to watch out for. But I also would not be surprised at all if we do just send to the upside and potentially, you know, grab all of this and then chop in here for that FOMC before sending into, you know, $85,000, $95,000 Bitcoin after that FOMC meeting. So that volatility we have Wednesday could easily be saved for when we are in this big liquidity zone to mess around with all of that leverage higher up on price. Jumping over to TradingView now. In our last video, we were talking about how I was looking for a retrace to the golden pocket before heading on up. We only got to the 382 and found massive support there, and actually did grab this low within here. So that was a proper little swing fail within there on that 382. And the higher level on the fibs you hold is actually the more bullish we are. So if we are not to come back down and test that golden pocket, that's just ultra bullish. It's not like we have to go test this range in here. We are also holding the value area low of the month beautifully, sending on up here to new highs. So if we were to, you know, pull back to that golden pocket now, well, now it's just coming up here higher, right? So potentially, you know, let's say we squeeze up into these imbalances, point of control, that sort of thing, and then come back down. This is something to be watching out for, right? Just like this, that's your high. Then you have a bullish golden pocket retest there before finally sending on up. This is a structure I could see playing out here, potentially, you know, sweeping this low like we talked about earlier before sending, and this would be an extremely bullish pattern. I also see the case where we just send up here and turn this entire move into just a deviation to the downside that trapped a bunch of shorts. At this low, we also saw somewhat of an exaggerated bullish divergence. I said I wanted to see a bullish divergence coming in here, and we did somewhat see that. You see lows at the same level, whereas you have higher lows on RSI, exaggerated bull div. Really nice confluence to see right there. Jumping into my levels identifier chart, we were talking about this fair value gap, this red box within here, and that if we started closing candles within this box, it was likely that we would teleport to the upside, and we have started to do that. That box was originally filling this area within here. So we have started to close candles within that fair value gap. This structure right here could turn out to be very bullish, and we could just rip straight through to the upside, filling these vectors and going right back up into this range and holding this before finally breaking out to new highs. But technically we did have a small swing failure on the chart. You can see wicks through this previous high, getting back under. That is technically bearish. And that could be a warning sign. Just don't take leveraged positions within this range, even though I am very bullish and I do think a squeeze up is very likely here. The time to long Bitcoin is not right now. It is on back test. So if we were to squeeze up into this range, you know, then back test golden pocket, you could take a long there. You could have taken a long on that 382 within here. You could take a long at this golden pocket with your stop right at the 1. You could also just wait for a failed auction and take it on that. So as we can see right now on the hourly time frame, I mean, this candle just flipped red. Like, this does not look bullish anymore. You might have FOMOed into a long 10 seconds ago, but now you're looking at this like, oh, I just messed up on that long position. That's why I say don't FOMO into longs like this. You wait for your pullbacks into identified levels, and this is where you could potentially take a leveraged position with a clear invalidation and risking an amount you will be happy to lose just to learn from that trade. All right, let's jump into the altcoin market now. I was talking about these fibs in my last video, like, hey, we got this big wick, likely to backtest the golden pocket before heading up, and we got a perfect backtest on the golden pocket on our total of 3 here. In my opinion, this wick is still your low. Could price come down and sweep this low real quick on the local time frame? Definitely could, right? It's a big liquidity game, and if a lot of positions FOMOed in long at this level or within this uptrend here, yeah, we could come sweep that low, take out the stops before heading up. But I do fully expect this golden pocket to hold and for this low to not be broken. And if you're wondering why I've been saying the altcoin season is about to start and you will no longer have a chance to buy after this next rally begins because we are just going to moon, let me show you where we are on a fractal basis versus last cycle. So memorize this structure that we're looking at right here, and let's go back, let's jump over to 2021 and let's see the structure we were forming last cycle before the second wave of the altcoin season. This is where I believe we are in the altcoin market. You have your first big high where there's a lot of euphoria. This would have been back in March where you had a lot of altcoins making their highs. We then drop back down, sweeping this low here, and then come up and start testing the golden pockets. Starting an uptrend here, you can see last cycle we did actually in fact make a new high before having our secondary correction, but you do see a secondary correction in here that sweeps out the liquidity here before you do see the altcoin market go absolutely vertical and send up to the highs of the bull market. And this run right here, the last wave of the bull market, lasts only around 20 days for that first high, and then you have a secondary rally, which I'm not sure if we're going to have, right? Because this secondary rally was unique for Bitcoin. I'm not too confident we're going to have, two massive highs on the Bitcoin chart again like we did have last cycle, so take that with a grain of salt. But it was about 45 days until we got that secondary high, which is why I've been saying people calling for the bull market to end late 2025 are just not correct, because even if we are earlier in the cycle, which I do think is possible, I'm not ruling this out at all. This is kind of my base case, my conservative case. There is still the case to be made that we are still just this low in the altcoin market, and this would have been your first high. This would have been the sweep of liquidity, and this would have been the sideways chop that we are in right now. And the low we just made would have been one of these two wicks here before starting the entire parabola of total 3 here. From these lows back here though, you take your measuring tool, draw this out even to the last high here, and that is around 110 days from now, which is still not 2025. So no matter where we are in the altcoin market, I just do not see the case for this bull market lasting into 2025 for any reasonable amount of time. I think the latest we get to is election season, because that makes a lot of sense for them to prop up markets and have the tops come in, the most euphoric times in the markets happening during the elections. So those are just some things to keep in mind. But either way you put it, we are bumping our heads up against the most bullish times in the altcoin market, where we do see these massive vertical runs up, where you do see 5, 10, 20, 50x gains across the board for all of your good altcoin projects. So yeah, I really do think we are in reaccumulation on the altcoin market. I'm seeing sentiment lower than it should be, for Bitcoin still being pretty much at the all-time highs, and I think everything is aligning for this final wave of the altcoin market, where we do see that opportunity for generational wealth. But if you have any questions about anything I talked about in this video, or want to just join the community for this channel, link to my Discord is in the description down below. I've also partnered up with Blowfin, so if you are a leverage trader and want to get up to a $300 futures deposit bonus, link to that is in my description down below as well. And with that being said, thank you all so much for watching, and I'll see you all in the next video.